What up, everybody? Welcome back to Royal Blu FX. In today's video, we're going to talk about how and why direction is the most important part of trading in Forex. A lot of people have their ways and theories of why and how price works in Forex, but I'm going to show you this really unique way of just seeing how direction works first, and why it's so powerful, and why it's key to everything in trading. Welcome back, my beloved subscribers. I messed up on that one. Bruh. Anyway, welcome back, my beloved subscribers. Anyway, I suck at this introduction, but hey, anyway, whoever has followed us and has followed us from day one, you guys were always important, and you guys are always loved. Please continue to follow us and watching our unique and crazy good content, because we always leave good content here for you guys on the channel. Also, for those that haven't followed us, please subscribe to this channel right now, because you will continue seeing us and how much good content we keep dropping in for you guys. Yeah, absolutely for free. Can you believe that? Anyway, let's continue. Those that do love our content so much and need more help in your trading, go ahead right now to our Discord. Our online academy is on our Discord channel right now. You'll be learning the PLT PhD theory with the actual supply and demand strategy, the way we trade. The link is in the description below, so check that out. Let's continue with this video. Alright guys, so welcome back. Alright, so I'm going to go and show you how important direction is in this video, okay? I'm going to have to stress it to you guys, because a lot of the times, a lot of traders that come into our channel, obviously everybody out there who is ever learning how to trade goes and dabbles into other people's, other content, obviously, to learn their methods, right? But in our case, in our scenario, we always prioritize direction in every way, okay? I'm going to show you in this video, again, how important direction is, no matter where and how you trade, okay? Direction is number one, and it's key to everything that you do, okay? So, first of all, let's go show you. I'm going to draw a diagram here, and I'm going to show you guys why direction is so important, okay? You got to need to understand sort of like the psychological base before you understand sort of that mechanical and structural base, okay? So the reason why direction is so important is because a lot of times when, let's just say, for example, when prices are going bullish, okay, and I always start with bullish examples. I don't know why. I think it's just something that I'm always immune to, okay? And then when prices start going bearish like this, right, we always want to be trading. Let's just say this is the 4-hour time frame, okay, from this low to this high, right, and continuing from here on. When we're going bearish, right, what we're doing essentially is we're following the higher time frames objective, right? So if price went up, right, mitigating a supply zone, okay, it's mitigating a supply zone like this. Our objective is obviously to trade away from the supply zone. Now I know everyone's like, okay, yeah, we heard this. We know you have to trade away from the supply zone, or trade away from the demand zone. Yes, we understand, but how do we identify direction? That's number one, okay, which I'm going to show you guys, okay? So let's just picture, for example, that this is the 4-hour, right? Whenever we're looking at the chart, we look at two things. We look at failed supplies and failed demand zones, okay? How do we translate failed demand and failed supplies? Well, the way we translate them is essentially when a low, let's just say when demand went up to try to break a new high, right, or the old high, but failed to do so, right, and it turned away from us, right, going bearish. This area here is considered that failed demand. Now we're looking at failed demands more than we are actually looking for so-called breaks of structures, because when you're looking at break of structure, that can tell you that direction is pushing in that direction, yes. However, there's multiple types of break of structures. There's the majors break of structures, there's your sub and minor break of structures, there's your micro break of structures, okay? And all that can get very overwhelming if you don't know which structure you're playing in the market. However, if you're playing failed supplies and failed demands, this can help you a lot more in finding which low, or which, let's just say, for example, when we're going bearish like this, okay, which demand, right, took place, where did demand take place, right, and where did it fail, right? So what we do in comparison to others, right, is we match another demand zone on the left side, right, versus the right side, right? So we would wait for price to come into the demand zone, something like this, right? And then we would say, okay, well, if this is a major supply zone here, okay, we anticipate the supply needs to fail, right? The demand needs to fail. The demand needs to fail. So when demand goes up, supply takes over, right? That's our sort of anticipation. That's what we're looking for, right? Now, price doesn't have to do that, but this is what we want, okay? let's go to another way. So let's talk about it this way, okay? So once we understand that the 4-hour, right, the 4-hour demand went up and it failed to break this high, prices flipped, right? This is where direction comes in handy. We know that price needs to come and mitigate back to the extreme, right? It's normally the extreme. It's usually right around I usually call about 90% of the way price needs to come and mitigate, right? Which is pretty much your high right there, right? Or sometimes price comes in and around about the 50 EQ, right? And I'll explain why. Because there's two types of structures that we trade. We either trade. Oh, let me just say this: price either moves, right? It goes like this. It breaks on an imbalanced fashion like this. Price breaks a high, right? And then all you're seeing is a low and a high. When this low here broke the high, it broke in an imbalanced fashion. That means price just went on bullish without creating internal structure. Okay? When it does this, that's our imbalance, right? Now, when prices are retracing, prices come in have to fill in the imbalance, right? So the market's giving everybody a chance to come in and fill in prices and where they think that that prices will take off from, right? The market's giving everyone a fair chance to buy the price, or the market at a correct price, right? So, however, you and I know that when prices retrace, that the last structural low actually happened here, right? That's where the banks have actually pushed price, right? So that's where you and I would be waiting, right over here, right? So picture this: there's an imbalanced fashion break right here to the high, right? And there's also internal structure break, okay? Which means price will create internal structure. This is terrible. Let me just do this again. Price will do this, right? So it goes up, right? Comes back down, and it'll continue creating internal structure like this, right? Slow. I'm writing on my mouse, on my mouse pad. Okay, something like this, right? Price breaks the high, right? So now you got to think about, well, what is price trying to do here, right? There's two types of breaks. There's either the imbalance break or there's the structural break. We have internal structure creating between this high and this low, right? Between this high and this low, there's the imbalance, and between this high and this low, there's your structural break, right? So in this case, we have to ask ourselves, well, where was the last push that happened from? Where did the banks actually push price from? Well, it was right here, right? This right here would be the next area for price for us to buy, right? Prices will do this, right? In some cases, price will just come and sweep the low, sweep like this, right? Sweep internal liquidity, and maybe mitigate something in here that wasn't fully mitigated, something like this, right? And then continue back bullish like that, okay? Something like this, but what are we doing here? We need to understand the objective of what the market's trying to do here. The objective of the market is always to try and build liquidity, okay? Build liquidity to take it and sweep it away from us, right? So anytime we're buying and selling, right, when we're trading supply and demand, we're in the liquidity area, right? We're creating liquidity essentially, okay? Once liquidity is created, we can then start to analyze we can start to analyze where price is actually unmitigated, right? Because there are moves in the market where price influences you to buy in, right? Essentially inducing you to continue buying high or continue buying low, right? And that's where I will show you guys in this video how to, of course, find out how to trade the directional bias based on where the price is, right? And how it's going to flow. So let's continue from here. I'm going to show you the subjective here. So the way the subjective essentially goes is this: we look at where demand is, right, versus where the previous demand was, and then if price fails, then we look to indicate this is our next supply zone, right? And then we would do it from here too, again, right here to here, right? Notice that if this demand took place, it never actually tapped maybe a demand zone here, right? But right here, there's another demand that took place, right? The last demand that took place put in a new low, right? Which means this is the failed demand that needs to come and mitigate. So we could say this is our next supply zone, just like that, right? Just like that, right? Now, of course, we're not considering the liquidity in there, right, or the internal structure, because there can be internal structure in each of the moves, right, where we have highs and lows internally, like this, something like this, just like this, like this, right? And then we can go and indicate and say, okay, well, maybe this is our previous our last buy to sell inside this low to this high. This is where the last unmitigated buy to sell was, right? And then we can come in here, wait for price to get there, and then sell it off from there. This is something like that. Okay. All right. So again, how do we base off our direction? It's based on two things: structural behavior and also the major time frame. Okay. So let's just again picture that this is the 4 hour, right? 4 hour low, 4 hour high, and internally we would be trading the internal structure away from the supply zone, right? So this supply zone here is essentially a failed demand, failed demand, right? So we would see something like this. I'll even probably draw it even a little better, but it's something like this, right? Picture this happening like this. Okay, so this would be a failed demand to supply. We wait for price to get back to our supply zone, and then we start trading the internal structure going bearish, right? So right in here, what we're hunting for, what we're looking for, is another failed demand, internal failed demand, right? Because this major failed demand right here failed, right? The supply took over. That means we're going to look for internal failed demands, right, to continue price bearish. And this is how one of the ways I indicate how direction works, right? Because I'm following structure and order flow, right? Prices have to mitigate. They always have to mitigate. And alongside that, when prices have to mitigate, before mitigations happen, before mitigations happen, price actually has to, it can create liquidity to induce you to get into other, smaller structure like the microstructure, right? But we have to keep it aware and an eye on what is happening on the far left, and rarely do a lot of traders focus on what's happening on the left, right, versus what's happening now, right? If you can just look at this impulse, right? So that's the other way to also look at direction. Just look at where the current impulse is on the daily, say, for example. If we're going the daily, you can look at the daily's bearish, then start looking for entries bearish on, say, the 4 hour or the 30-minute, right? But I don't advise that, and the only reason why I don't advise that is because in order for us to trade, we always need to be looking at both buyers and sellers. Where are the buyers versus the sellers? Where the sellers were versus where the buyers are. And that way you can see that really that all it ever is, okay, based on buyers and sellers, is just interactions between one and the other. Okay, it's interactions, meaning that if buyers took a buy here, for example, right, and more buyers are interested in this demand zone, right, then they fail, we know that demand is failing, and then that tells us that about 99% of the time, wherever traders are buying or selling, they're going to most likely fail, right? Because it's that 1% in the Forex market or in the markets that always ever win, right? So we ask ourselves, in theory and psychologically, it makes sense. Be where the buyers and sellers are that fail all the time, right? So wherever there's failed demand and failed supply, price, most likely, and 99% of the time, that's where price is going to come back to and mitigate, right? Mitigate and then take off, right? So I want to, without me blabbering too much on this example here, I'm going to go show you guys on the live example right now. All right, guys, so here we are on the live chart example. So what I'm going to do is just kind of cherry pick and show you guys how this example works, okay? So let's just cut this market, right? Cut it right here, just anywhere really, maybe even there. And then we're going to look at the 4 hour, right? We're on the 4 hour time frame right now. What I want you guys to just see, okay, is have an overall picture of what price is doing and where price is in comparison to where you're about to trade, right? So what we're trying to do here now is have a perspective, okay? Because everything is perspective in the market, right? Everybody can see price the way they all want to see it, right? But I'm going to show you guys how to see it a lot better in terms of direction, so you guys can be able to trade it better, anything better in the markets, right? So, all right, let's just say, for example, everybody, if we zoom out, you guys can see that prices are bullish, right? Right here you can see that there's a sell to buy. We have a weak supply, strong demand into place, right? Now, how do I cross-reference this? Well, I need to be able to see where the failed supply is coming from. Is it coming from somewhere? It may not come up from somewhere sometimes, but if it does, that's a good sign for us, because we normally like to play failed supplies and demands that react to other previous failed supplies and demands. So far, we're on the weekly. There's really nothing. Gold is at an all-time high right here. There's really nothing. So we kind of have to actually speculate and make sure we have confirmation here. We can't just buy here aggressive, right? So here's your failed supply to demand, right? we can't just start buying here aggressive, because if we do, we could lose the chance of obviously losing this trade, right? So in this case, what we're going to be doing is you can look for confirmation, right? So let's just do this, right? You can see failed supply demand. We can wait for prices to get here, right? Once they get here, you start to look for prices to run bullish, right? Now, simultaneously, as we're looking for price to go bullish, there's also bearish going on, right? How do we do this? Or what does this mean, actually? You can see over here to the left that there's your sell to buy. This is a demand zone right here. So we had other interested traders, other interested buyers that bought here. You can see how price failed, right? So price failed by this demand trying to go high to break that high over there, right? But it failed by going bearish, right? So now we know, since this demand tried to go up, it failed. This is our next supply zone, just like this. Okay, hold on a second. Just like that, right? So this would be our supply, right? Now this is our supply zone. Now, if we were here at that time, we would scale down on a 30-minute or maybe even the 15-minute and look for your for price to reverse, right? And then look to sell this off, right? So again, direction is based off of structure, based off of failed supply and demand and structure, essentially. Okay, so what we're doing here is we're looking and referring to the left side as we're also referring to what's happening on the right side, right? So you can see here, my drawing pen right here, okay, right? So what we're doing here is we're referring to this impulse simultaneously as price is going bearish. We're trying to refer to what's happening on the right side, right? And so far you can see we had buy to sell, waited for price to get there to sell it off, right? So from here we can see that if we were to buy here this aggressive, because this is a sell to buy, right, failed supply to demand, in return we should see price running bullish, right? We don't know if price is going to run this high to the higher now because we have what's called an obstacle. This is the obstacle, right, where we have internal substructure running bearish, right? So far we can see now that this high tried to run the low here, right, but it couldn't break it. So now that's where price stopped, and then price starts to run, right? So now we understand that prices are most likely bullish because this supply here is weak and didn't break this low. So we consider this is a weak supply, right, and we consider this is a strong demand. Now, let's say we want to continue from here. Where should we continue? Well, there's few areas. There's your area here. There's your buy to sell. So we can span that across and say, well, this is our supply, right? Our supply zone is here. Price sold, then bought, right? So we can say this is an interesting area here because there's failed suppliers to demand, right? So eventually we're going to see price coming in here for price to continue bullish. However, we can also see other areas that prices are also weak. And this is where structure is fractal, and you have to understand the structure is fractal in order to play it correctly. So right here, again, this is how we dictate how direction goes. Look at this. Price sold off, right? It's selling off. And now we're going to wait for price to continue. Now, I can also see from this low, from this demand, this supply zone right here, look where other suppliers have interacted right here. Sell to buy. They came and stopped here, right? They sold right here because there were more suppliers here. And then price flipped up. Now, if I was here at that time, I would be ready to look to enter right here, right, on this demand zone, to look for buys. We could scale all the way down. I don't know how far I can scale down, so bear here with me. Maybe the 5 minute. Can we get it? Yep, good. Okay, great. So we would have been able to be ready here to look to enter right away. Now, the way our strategy essentially also involves liquidity. Liquidity is really just, it all factors into our supply and demand. So you don't really necessarily have to look for liquidity. You just look for your supply and demands, right? So this will all be liquidity right there, right? You can see there's buyers there, more buyers there. All these guys are swept, right? Price comes and sweeps and mitigates and then continues bullish, right? So if we want to continue from here, how do we do this, right? Well, we can see here, right? We can see that the higher time frame is telling us that we're bullish still, right? We're here in the supply zone. Supply failed. This high failed to break this low, which means we're bullish. We're running bullish now. Over here, we can see there's more supply, right? This is a failed demand to supply. So other supply traders were interested in here, right, to look for areas to sell, which they sold, right? Maybe they failed. Maybe, we're looking for them to fail, obviously, right? So our objective is to wait for price to run this high, essentially run this high. Then now we can see that there were sellers here and here that were involved, fail supply to demand. Once this happens, we can start to look to profit like this, right? We're going to wait for price to do this and literally just wait to buy like this, right? Because now we wait for price to come back about 90% of the way and then to continue, right? But what do we do from here? Can we continue price from here, or should we just wait for price to get to this demand? We can do either or because price is fractal, right? So let's continue from here. We can see we had a area of supply there, right? So this is a supply zone there. Supply zone there, right? So we have failed supply to demand. What do you suppose price needs to do? It needs to come back to us, right? We need to allow price to get back to us in order to continue bullish, right? So with we're going with the intention of price and the direction being bullish here, right? So all we're looking is for buys, not for sells, right? Let's continue here. We're seeing that there is more interested suppliers right there. Right, people sold there and here, right? So all I'm doing is I'm just waiting. Can price come here and fulfill my anticipation from what I want, right? If it does, great, I'll buy. If it doesn't, don't stress about it. You can see more suppliers now sold here, and if price starts to run, then we continue from there, right? Let's continue from here. Look at what happened, right? So we had your sell to buy. Let me just mark this out clearly for you guys. I didn't catch this right away, but there's your sell to buy. Price comes back in for the entry to continue price bullish, right? So there we go, right? Let's just say, right, this was the entry because there was two scenarios to this, right? This is one of them like this, and now we can start targeting the main high because this is the internal. That's the external high or the old high, right? We don't know if price is going to continue running above this high, right? We want it to, and if it does, we can wait for this main demand zone for price to come into TP, right? Or to mitigate, excuse me, not to TP. We also see this here, right? You can see there's your supply, more supply. So you can start stacking in trades here, right? Just like that. Okay, this one gave out, no problem. So we would have given up on that one. Maybe this one would have been a fail, right? We'll continue off of this one now because this is the next one that should put in the next high. Let's continue here. There we go. Okay, just requires a little more patience, right? In fact, this one here, I'll tell you guys about this one. This one in here is the fractal, the very small, the microstructure. You can see how price sold and then bought, right? Price came back in here for the buy, right? So this is microstructure. So I guess you could say that microstructure would have been better here, right? If you want to scale down even on lower time frames, maybe even 3 minute, right? Because price did work. However, this topic's all about finding the correct supply and demand zone, right? In order to find the correct direction. So there we go. We just entered there, right? And we're wanting to TP at this high at minimum, right? So that would have fulfilled your move, right? So right here we have more, right? More supply right here, supply here, more failed supply to demand. We can wait for prices to get back to this demand zone now. Oops, we just reached that out, right? Okay, but mind you, while we're doing this, there is a bunch of liquidity here, which means price could do this, come up and do this, and just take us out and just continue bullish, right? So either way, okay. We can also look for confirmation. Okay, right here, this is also an interesting area, right, for buyers because we did have supply there, more failed supply to demand. This could be a buy here, but we can just wait for that to be swept because we're really looking for the main one, which is right down there. Let's see if we can get it. Let's play it kind of quick. Okay, this is rather big actually, right here. Right, excuse me, not there. Okay, right here. I see it right there. There's your failed supply to demand. Did this failed supply to demand act to something? Yes, it did, right there. Okay, so we can say this is our next area for buys, right? So we can wait for price to get there. Let's play it quick, see what happens. Price is not coming to us. That's okay. If it doesn't come in there, don't force and start buying from here, right? We need to cross-reference. Did this failed supply react to other more failed supply? And if it did, we can continue with it, right? Let's see if we can find more failed supplies. No, nothing from there. Let's go back on the 30-minute. Maybe we can find on the 30-minute, and maybe we can continue from here. Yeah, okay, yeah, it's still, yeah, we're still in the supply zone right there, right? Okay, so there's your supply, right? And if I zoom in here, look what happened. Failed supply to demand, right? So this is a confirmed demand zone. We're going to wait for price to get back to this demand zone right here. Right, so you can do that. We can play it, wait for price to get there. Let's play it quick. Okay, prices are going right below. This is also a liquidity sweep, right? Which also indicates that prices can run bullish here. Okay, let's continue. Right there, prices are given out. I can see. Okay, prices are given out, so they're going bearish. Okay, right here is where we're going to continue. Nope, they're not. All right, there we go. That's what we thought. Oops, there we go. Okay, so my theory still proves itself right here. You guys can see there's your failed supply to demand. Price comes into the demand zone and takes off. Sometimes price does come off and sweep. You know, I usually use the 50 EQ like this, right, and just enter off from like this. When price gets in there, we just enter. Now notice again, we had a supply zone right here. This would be your supply. Right here, there's your supply, right? Failed supply to demand. So we wait for price to get here for the buy, right? Anything below the 50 EQ is where I always enter. Normally is where I like to enter because I don't like to buy everything in the premium. I like to buy everything in the discounted area, right? So this would have been a good entry nonetheless, right? And then let's just go back on the 30-minute, right? Let's go look at and see what the 30 minutes telling us right here. So far we can see, let me see. Okay, there we go. This supply took to the demand, right? So now we can see that this is the next area for an entry right here. So we can wait here on the 30-minute. Oh my gosh, we got wiped out. This must have been news, right? It was 5:30 news. It's normally a CPI news. All right, here. If you zoom out just a bit more, you can see where sell, this large area here, sell to buy, price come in, and went right back up, right? So we could have been prepared for that, right? You can continue stacking internally. This is all internal structure, and then price comes back to sweep eventually to take everything higher, right? Now the higher you go, obviously the more liquidity that it's building, right, for the main low here to be mitigated, right, to continue bullish. Now let's continue from here. We're going to stick to the 30-minute time frame, and then we're going to look for other areas like here. I'm interested in this. Let's see if price can come down there to mitigate. Nothing. I don't see anything. Okay, here we go. This is interesting. Here we go. So here we have the sell to buy, right? And from here, from this low to this high, we have a buy to sell. So it's the direction isn't bearish, but we have internal structure says the price is bearish, right? So what we can do is wait for either this demand or this supply to mitigate, and we'll continue from we'll continue from here. We also have this internal micro, which most likely may not work. It's TPing right there, right? So let's go down to the 3-minute, see if we can capture a reversal. Okay, it's respecting. There's liquidity sweep, right? Here is your first change of character, not just, yeah, okay, there we go, boom. And then from here, we can say this is our next entry right there. Right, so we can enter from here as soon as price comes there. All right, it did go down. Let me just show you guys. It did go down, but this is, again, microstructure from the higher time frame. It actually did right there. You can see it. Let's go from here. Had I had my position, actually, let's even have this, the 50 EQ, right? We'd wait for a price. Where's my sell? Here it is. Right, boom, right? At minimum of this low or this low, depending on how you see this fit, right? But normally price will come in, right? Boom, there we go, and that's your sell, right? So it did go into our supply zone, right? It did come to mitigate and TP at this low, at least at this low, right? Because this is micro, but we know the main objective is this high because that's where the main area is needing to mitigate. So let's continue from here. We see this area split at 50%. Let's get our tool here to go and enter from here. We're going to target this demand zone. Now, at minimum, we should target this demand zone. Let's see what happens. There we go. You can see prices taken off rather nicely because, again, this is a failed demand to supply. It came in and interacted to the sell to buy. There's your demand to supply. Price comes in and sells off, right? Now, at minimum, you can come and collect partial profits here, right? And then maybe hold the rest of the way back down. Now, if you want to continue with this entry, right, we can say, well, where did this come in? Let's see if any other demand zone came in. Nope, nothing really. There is your, maybe we can count this here, this little tiny area. Let me just kind of get rid of this out here so we can get clear right there. So right here, we see where the last sell to buy happened. It happened here and here, right? We can also see it happen here, right? Buy to sell. So we can also say we can look for price to get here, right? So if price retraces there, I'll sell off. If it starts selling off here, it's totally fine. We're going to continue working with what we have here. Okay, so prices did react to this little internal one. That's fine. Now we're going to continue from here, right? We're going to wait for this one. Now, why are we marking supply zone here? Well, it's because this demand took place, and it took off based off of this demand. There's demand here, more demand here, failed demand to supply. So we're going to wait for prices to come back in there, right? If they come up there, okay. I do also see this one in there, so we can adapt a structure eventually. This does not look good. Okay, fine. There we go. This is the one I wanted. Right there. Took an, oop, not that one. It'd be this one. Now, mind you, we're bullish, right? So I would have entered here, right? Like this one, like I mentioned. TP it here at this demand, at minimum at this demand. This demand should actually take, I should be buying here now. Now, you could argue and say, well, what is this? Is this a buy or a sell for me, right? Because sometimes price presents itself in two different ways. It's either going to be a buy or a sell, or it's going to be both buy and a sell. And this is where the patience comes in, that clarification in trading, right? You can hedge this too. So let's just say I bought here, right? And I'm selling here. One of these is going to work out, and you're going to have to cut off one of them, right? So let's continue. Notice how price continues, right? So we would have been able to buy, maybe break even on this one, right? And TP on this one. Maybe at minimum at this demand zone right here, because we don't know if prices should continue bearish from here. For all we know, actually they could, because we do have this failed sell to buy, and prices could be intending to come all the way to this major demand zone right here, right? But we have no clarification until this demand breaks. We don't know if prices should continue bearish here. So maybe we can say we're done there, right? And then still hold on to this demand or whatever, right? Okay, prices failed, right? This would have been a break even, right? You could say I'm targeting here at minimum, maybe taking partials here and then finishing here at the high, right? Or maybe just holding this at the next high there while you hedged this down bearish, right? Everything's subjective, by the way, right? Don't take everything so literal. Everything is subjective, right? One way can work out better than the other, right? It's all subjective. So let's continue from here. We have a failed demand right there, right? There's your demand that took place here as well, demand, right? So this should be the next selling area for us, right? Let's continue. All right, there we go. Right, price continue. Now, notice sometimes price doesn't always come to the 50, which is okay. You need to be observant more, right? Like here, there, right there is your last buy to sell, right? So this was unmitigated right there. So that could have been your entry, right? And we could still be targeting everything down here now. We could be saying, okay, well, I'm holding here and entering, or sorry, targeting this. You might be wondering, why are you only targeting the outer part of the zone and not the inner part? Well, it's a good question, because a lot of times price may not mitigate, and a lot of times when price gets to a demand zone or a supply zone, people buy off from these levels, right? And then price just starts to shoot up. And it could be most likely an inducement or something. So let's continue, right? Play quickly here. You can continue shorting this if you'd like, and then you could look at each demand zone here, just like this. So notice again, guys, I'm able to see how direction's going based off of these supply and demand zones. right? This is another interesting area here because you can see demand took off, supply then took off after that, right? This is where we could look to sell it off from. Okay, this would have been a loss. Okay, not everything works 100% of the time, but I'm telling you it happens more times than not. Let's look at above here and seeing where the price take off. It was right there. So we could say this is a failed demand to supply. This demand is trying to run bullish now to mitigate here. We could say there is our chalk bust there. Price mitigated. That's a wick there, so I'll cover these two areas here. I'll be most likely looking to short it from here once price gets there. All right, there we go. You see how that works, guys, like magic. Let's actually do that, right? And at minimum, target this low here. Now we could still target this. This is the main one here, obviously, right? There's nothing obviously is 100%, but we want to be going with the intent that it could most likely hit that. Look how price goes above, right? So you could either cover that high or, because this is still the high, so you could still be holding this trade, right? Depending on how price works here. It's kind of ugly, but there you go, right? And look at that, price plummets. Right, so there's your internal, right? But you could also look at this whole thing as a whole, say buy to sell, put the supply zone, split it 50 EQ like so, like here, oops, not there. There it is. Just like that, right? And then maybe look to target the 50 EQ right up there. This is why I love targeting the 50 EQ more importantly than just entering from anywhere without, on the open. This is the open area, right? People buy, people sell there, only for you to get tricked. Liquidity, sell, done, right? So you could have done that too, just like that, right? But like again, the intention here, even if I did sell here, right? Based on the direction, where's the direction? The direction is bearish because we already see that all supply is winning here. Demand is failing, right? Demand has failed from this point on right here. That's why we could have held all this, right? If we had the guts to hold all this, right? You can do this, obviously, hold all the trades down here, right? But sometimes, when you're trading, there's no sheer knowledge of knowing, should I be this confident, to hold trades this longer, right? You can do this, obviously, right? And then the intention from here now is just to run up, right? All right, guys, so I hope this kind of made sense, and if it did, please throw me a huge thumbs up, and if you have a lot of questions, right, go ahead and put it in the comments below. Until then, guys, I will see you in the next video.